You are self-employed and you are thinking about buying a house next year, you want to watch this video. I have James Allenbach here, local lender here in Yucca Valley. We did two videos. We did a short one. This is the longer one. This is more in depth for you buyers that are self-employed, right? We are going into Q4 and this is where most people start thinking about taxes.
So when you start bringing those numbers together to get it ready for your CPA in February.
Right, and again, the number one issue that you have when you're trying to qualify self-employed people is what?
Write-offs are too heavy. They deduct way too much of the income, which obviously we don't want to pay any more taxes than we have to, which I completely understand. But when that deduction is so heavy, it doesn't leave us enough proverbial meat on the bone to qualify for that mortgage payment.
Yeah, and we're not tax advisors, guys, so obviously talk to your tax advisor. But what we're going to be talking about is why so many people make that mistake, and it causes like an end to their dream of owning a home.
Correct.
You know, and there's workarounds, which we'll talk about in a second. But the big thing is that we run into all the time is a self-employed person making money. They're making real money.
Yep.
The issue is not the money. The issue is that they're not saying they're making that much money. They're writing off a ton of it.
Correct.
And they want to borrow hundreds and hundreds of thousands of dollars, right?
Yep.
So basically, what strategies would you suggest if they're wanting to do this?
Biggest thing first is we need your previous year's tax return and the idea of what you're looking to purchase. Price point, down payment, loan term, what monthly payment you're comfortable with. And we use that information to structure the income for the upcoming tax year to make sure that you're going to qualify for just more common conventional lending. There's always going to be workarounds like non-QM, bank statement loans, DSCR, things like that. But unfortunately, those loan products that are available, they come with some really negative features. Prepayment penalties is one, larger down payment requirements, interest rate pricing is substantially worse than just normal conventional financing. So if we can help mold an upcoming income year, so the 2026 return, which you would use to qualify in 2027, then we can kind of help mitigate any of the risk of you not qualifying for that property that you're trying to purchase.
Now, quick question, so say for instance, a lot of times it's, they're looking at 2 years of tax statements, right? What if they wrote off a bunch of money on 2025?
So
do you change your amount that they should?
Yes and no. Okay. And here's why. If your self-employed business has 5 tax return years, been in existence for 5 years, then we can use only the most recent 1 year. So we would only use 2026. So 2025 becomes irrelevant almost.
That's awesome.
Now, in that case, when you have been less than 5 years of existence, then all of the banks are going to require your most recent 2 years. So the business that's been a little bit more substantiated for 5 years is a lot easier to mold or help forecast, where the 2-year average, if the deductions were really heavy in 25, then the number that you would have to show in 26 is going to have to be pretty strong in order to get a 24-month average that's going to support the purchase price.
Yeah, that makes perfect sense. So that's a huge advantage.
For sure.
You've been in for 5 years, I didn't even know that. So that's really awesome. One thing that I wanted to suggest to everybody watching, which is what I do personally every single year with James, is I submit all my documentation to my tax advisor. He gives me a draft copy. Now that is the most important thing, is don't have them file it, right?
Correct.
You want a draft copy. You take draft copy, you give to James, and you tell him all the things that I want to do, purchase price, all that stuff. And then he runs it with his underwriters and verifies that, yes, you're not going to have an issue when it comes to income that you're showing to be able to purchase and accomplish what you're trying to do in the next year.
Correct.
Right.
And if we do it this way, then we can really look at how much money do you want to put down? What is your ultimate purchase price? And as you kind of look into that crystal ball of the future, you just really need to be honest with yourself and set those goals on the high end. Like if you think you might spend $550, then let's qualify you to $600. Yeah. And then we hold that draft copy, and then once you're actually in contract, then we start to work with the CPA to have it filed. And then once we have the filed return, we can go ahead and just push right through escrow and closing.
Yeah, and sometimes I thought that I was going to have to show more, and you're like, no, you only need this.
Correct.
So it's a savings, to be honest with you, because you're only, when you're self-employed, there's some wiggle room that you can do on your income.
Correct. We have a little more latitude,
is
what we like to say.
Latitude.
And there's things as a self-employed person that we give you back.
Yep.
Like if you wrote off, perfect example, if you wrote off a large vehicle for $100,000 worth of depreciation, well, we can give you that $100,000 back as qualifying income because it's considered a non-monetary loss. So ensuring with your CPA that we're taking advantage of all of those deductions, especially mileage and things that we can give you back, that those are captured accurately becomes crucially important because it still helps you qualify without overexposing you to additional taxation.
Yep. So it's so easy. And so we just see it. The reason why I'm doing this video with James is because I see it all the time. I have, I work with contractors every day, and they want to purchase a house, but they just can't get qualified due to income.
Very common.
So I wanted to do this video and just show that it's very easy to do. It's so easy. It just takes a little bit of work with professionals to make sure that it can happen.
Yep. And once we have a draft copy of that 2027 return, start to finish, that qualification can be penciled out in about 2 working days.
That's it.
Yep.
Right. So super easy, guys. If you would like more information or you would want more specific information about yourself, please feel free to reach out to James. I'm gonna put his number in this, and you can also reach out to me. One thing that I did also want to state before we end was that you briefly mentioned about it, like, if you did end up writing off a bunch of money, it's not the end all be all, right?
Yep.
You can absolutely still purchase a home. You're just going down a different program that is way more expensive. Like
Correct.
that, you are paying for that. So if you want to do a traditional finance, like a normal conventional loan,
FHA, VA, USDA, any of those normal, more common products in the marketplace, we definitely need to work on the income forecast ahead of time.
Very good. Well, I hope you guys enjoyed this. Please comment if you did, if it was helpful, because I'll do more things like this. And I hope you all have an amazing day.